All right, guys. It is Thursday. Had to think about that for a second. It's a good sign. Thursday, July 13th. This is Red Ben. You can get a hold of me at Red Ben Trader on Twitter or Threads. And if you want to learn more about the algo or the trading room that I trade in, it is the algo is developed by my coach, and he also runs the trading room. There's a cost associated monthly with the trading room, but it includes getting the algo on your desktop. Then you can either use it as it is, or you can customize it like I have. If you're in the room with me and you want me to help you add one of my signals that I've added to Simon's algo, let me know on Slack. Just DM me in Slack, and I can help you figure that out. If you don't already have the algo, unfortunately, like you need a custom study from Simon to be able to get the algo to work. So even if you have Sierra charts, I can't just give away the what's it called, the chart book. I mean, I could, but it won't work because you don't have the custom studies. So first you need Simon's algo, and then if you want to add more, you can. But we had a crazy day today, and it's still not closed. I mean, I we haven't seen this for a bit. Um, we opened with like a little flush after inventory went full on. Oh, sorry, fighter jets. I forgot it's noon. They love to fly at lunchtime. Sorry about that. I know they're loud. So yeah, after yesterday going up all morning and then getting a nice pullback and recovering, this basically turned into like a basically a consolidation. So sorry, I know it's loud. Here, let me just. They're flying right over my house. Just give them a second. So yeah, the yesterday looked pretty crazy in the morning, and then it tried to recover and it couldn't. Like I mentioned before, this was yesterday. This was CPI, I think, or yeah, PPI, CPI. And we couldn't take out the low there in the afternoon, and I mentioned that made this for a pretty easy rip up. But then you can see overnight they just floated this higher. And when we opened, everyone in the room was like, "Really? Like trend day up again?" Like they they pushed it straight up at the open. And like I said, that was, I don't know, just it used to do this all the time back in like 2020, like late second half of 2020. Like this was like every day. It's just like, oh, another trend day up. But open drive higher was like not really what we wanted to see. And so there wasn't, I didn't take any trades in the first 15 minutes. I was like, I really wanted a dip. It's just, it's hard to like know how to value price when it's so extended. But the truth is, it can just keep going as long as it wants. Like it really can. So it did pull back and gave a nice opportunity here to buy. And this was a really pretty one because they had drawn price to the voodoo range level here, and then like negotiated it. And then you can see that we left the area, ran into this voodoo range level, came back and couldn't breach this one. So the market makers that appear to be doing that, they expect this level to get tested, and when it doesn't, they are immediately going to stop selling. And when there's no more selling, everybody buys. And so this like illiquidity, where we had talked about this a lot yesterday, I'm not going to go into it deeply because it's still open and it'd be fun to watch. But this illiquidity where it goes straight up and then recovers basically like 90% of it and then recovers 100% of that, you have to be prepared for price to continue the trend. It did this exact same thing yesterday, just on a bigger time frame. It's the same as this. See that? It's just a fractal. So I was expecting. Well, I saw this. This was a good short. I caught that, but I was really hoping that we would get a deeper pullback after this one bounced. I wanted this one to be the high a day, and I really, really wanted it to come back in here and re-auction some of the overnight, because the truth is that further we go like exponential like this, the deeper, the harder it is to trade to the short side, basically. And so, I mean, and that's not all bad, but it sure is frustrating when like you miss like this, and then eventually we're going to get one of these again, and everyone's going to assume that that's the top, and then if they don't make a lower low, it's just going to go again. But this was a tradable location here that I was sharing on Twitter. It looked like it might reject, and it just didn't trigger. And so the right choice there is to go long. I actually did that, but got frustrated because it just wasn't going anywhere, and I had to like get ready for the rest of my day. I've got an appointment like at the end of the day here, so we have an hour basically to look over this and just see if there's any opportunities in the last hour. I kind of doubt there will be. We will probably close at high of day. Yeah, I was long in here, and I it was profitable, but I could have held. I just really didn't feel like having risk on when I saw this action. It was just like, why? Like, I mean, this is likely, so I suppose I could have held it. My target was 15,717, which was a previous high from like a long time ago, I believe. Where is that from? I don't even know. I can't see it on this chart. Let me see if I can find it. What happened to my internet? Okay. Oh, maybe TradingView is messing up. I can't seem to load my chart. There we go. It was just really slow. Can't see anything on the... Maybe I'm wrong. No, I don't know. I don't know why I had that there. Is it a voodoo range level? No. I don't know. Not sure. It should be coming from the profile. Nope. I have no idea where that came from. Okay, well, like I said, I had a target up there, but I now don't know how I determined that. Maybe it was a fib extension or something. I don't know. I don't have it on my chart, on the TradingView chart. So when I was in, that was my target. I probably should have just left alone, but it is really hard to hold, for me anyway, to hold through all these like wiggles, because they take forever and they look like they could turn. Oh, here he comes back. Sorry. So sorry about the fighter jet. It's what you get for living near an Air Force base. Vegas is great, but yeah, Nellis is noisy. So yeah, I didn't have a reason to sell other than I just didn't want to risk giving back the day. And that's the hardest part about the afternoon, is like if you did okay in the morning, it feels like all it would take. I mean, it would have just been a stop, right? So it's not like you go red on the day, but it's, I don't know, you feel like I did everything right, so why should I have any risk on when like I know that this could just drop, but the reality is it rarely does. It usually closes near high of day, or at least pushes into the last hour and then maybe gets some profit taking, but it doesn't, it's very rare for these explosive moves to reverse completely in a single day. And everyone remembers when they happen, but that is not the norm. This is the norm, believe it or not. I mean, it literally happened just yesterday. So, yeah, like you can get these little pullbacks where everyone sells and then you gap up and they all have to cover. So don't let your like emotions about thinking that it can't go higher get you short. Like I said, I gave into it when it came to managing risk, but that's not all bad. But yeah, I easily could have caught this, and I'd be out here. But we'll see what they do. Let's take a look. So this is the 24 tick. This is all NQ. If you're new to my stream, you are probably overwhelmed and left already. But these are all NQ. The one on the right is the highest Renko tick, so like the biggest bars. And then this is my primary one, the 15 tick, where I do most of my scalping. And then the 24 tick, if this gets really fast and I can't process it, I switch to the 24. But I've been trading the 15 most of the time, especially when it's this slow. Like in the afternoon, it just kind of grinded higher. So like waiting for these bars to close for your entry signal to come in is just like you just fall asleep. So the problem with using such a small time frame, like I guess it's not a time frame, but such a small bar, is you can get a lot of false signals if you don't know which direction to trade. Like if you're just biased and you think like this is the top, I know it's gonna drop here, like you'll find a reason to short it. Like if you go small enough, you'll find the shorts. They will show up. It's not like the algo never triggers short when it's going straight up. It does. It's not going to trigger very often, but if you go to a small enough bar, it will trigger. Now, the interesting thing is, on a day like this, if you look at one of these bigger charts, like purple bar, and then beat it with the triangle up, that's your last entry, and it's just gone up since then at like 10:30. So I mean, it once you see that on the higher time frame, and especially if like, see how we're just like hugging the top of that Keltner channel, like that is really tough to beat, because that's just it's not, how can I say this, like it doesn't look healthy, but it is totally fine. They can keep going. Where it gets overbought, quote unquote, Simon hates that term, and I agree. Like you don't want to think that it just has to go down, but where it usually starts to rest, not necessarily reverse, but rest, is where you can't touch the top of the Keltner channel like this. And when the pullbacks come in like that, they just bounce. You'll get like capitulation, but if one of these vulnerable bars gets pummeled hard, the see all the volume, the dotted line here is where the majority of the volume is traded, and you can see the further away you get from that, you need to get volume to shift up to continue going. So now not only have we gotten far away from volume, but we've also gotten far away from the Keltner channel. And in a normal neutral environment, most of the volume should be expected to go off in the Keltner channel. And when it doesn't, then either you're trending and people are stuck underneath and there's just no sellers because all the sellers were sellers are buyers now, or it's preparing to pull back and mean revert. So yeah, you don't want to assume that it has to reverse, but the further away it gets from the dotted line without shifting volume up, and especially if you're above the Keltner channel, the more dangerous it is. So what buyers need to do here to continue is they actually have to increase aggression and volume, just to keep price going. And what usually happens is sellers just give up. You get pink bars, and they have an easy time pushing price up until sellers show up again, and then they are caught off guard. So like, see, pink, pink, pink. Now this one hasn't closed yet, but if it closes pink, it suggests price is rising, but primarily due to illiquidity. It's not like there's a bunch of heavy buyers in there. It's just a lack of sellers. There are no passive sellers sitting on the order book, and the ones who were there have pulled their orders. So you actually don't need an increase of aggression to push price higher. You just need sellers to not show up. But if they do, and they take those out, well, there hasn't been a real buyer for a long time. So that whole like move can get taken back really easily. Doesn't mean it will though, because it would require an aggressive seller to come in. You can see them on the algo as stars and X's. I don't see any X's. Let's see. Here's a buyer. Oh, no. We haven't seen one for a long time. Uh, there we go. That's a star and an X. It just wasn't positioned very well and he got trapped. But if they get bars that look like this and they put them in the right spot up here after a bunch of pink bars, and then if buyers don't defend with aggression, you can then get a pullback. But there's really no reason to sell until you see that. See, when sellers do come in with aggression, the star or the ring too, I guess, buyers now are attacking aggressively with an X. So star down, X up is an entry in a trending market. So like I can, it's a horrible place to buy, right? But I can demonstrate. We'll take it and I'll show you. It's probably the top because now we're at my like ambiguous level that I had on the chart somewhere, but I'll show you how oftentimes you can actually continue to take this. Like it's the end of the day, realize this is not high odds, but this guy can get easily buried because he tried to attack and buyers who weren't really needing to work very hard this whole time, they immediately showed up and they're like, oh, you thought we were done? No, we got lots more ammo here. And then he's going to give up, so we'll get more pink bars and then we can cover. Hopefully. The blue in the background is delta divergence, so it actually means that the majority of the volume on these bars is coming on an uptick, which means, but it, or sorry, it's coming on a downtick, yet the Renko bar closed bullish. So what that means is like the sellers were trying really hard, but they couldn't even close the bar bearish. It's not always bullish to see that, but when you get over it, and especially if they act as support like that, it's like sellers, everybody who was aggressively selling inside that bar is trapped here. So now this is support pretty consistently. I hate buying up here, but it's not wrong. The thing that sucks is when the top is reached, it's gonna be brutal, and I might get slippage, which would blow. But this is trend trading, by the way. This is not what Simon teaches at all. These continuation trades do not have a great win rate, but when it's trending like this, like it works more often than it should. But if you looked at every star down X up, you'd probably find 30% of them continue. Watch, this one doesn't. But if you can identify that there are shorts trapped below you, that increases to like 50%. But the trade and perform entries that Simon teaches, that has 66 or 70% win rates. And they're like precision mean reversion trades where like we're waiting for a location to be returned to and then we're attacking weakness to bring it back to like a neutral environment and then potentially holding a runner to continue higher or lower if you're shorting. So yeah, I'm demonstrating that with the algo signals, I can not only trade like with a high win rate using the trade and perform entries, but once you kind of watch this and you understand how these work, if you know the direction, you can trend trade with it too. It's just you have to be aware that like if it fails, you gotta back off because like if it's trend day up, this should work. And if it's not working, you're either wrong about the trend or it's like beginning to like settle down and the momentum has actually decreased. And yeah, then you don't really want to be aggressively buying anymore at the highs. But this is as close to like a breakout trade that I'll take. Um, there's one other one where if I get a dash like this above the channel, just like this, if we didn't have a high right here, if this was the high, I could buy that in a trend. It's got to be trending though. You cannot do that in neutral. Do not trend trade if it's not trending. Don't momentum trade, you know? So what we want to see here after entering is just kind of like grind higher. We really shouldn't see a lot of defense here. And this T, we can't get the yellow line below the T on a bear bar, on a bar that looks like this, that like stone color, like the gray bar, or this one. Like this yellow line on one of those bars cannot get below it. If it does, that guy gets trapped and they can reverse it. So you can, knowing that, I can buy when they hold like this, but yeah, you don't want to be long if they're giving those up. So we'll see. It, like I said, I'll be happy with 10 points, and then I'll leave a runner because you never know. Into the close, it could literally squeeze another 40 points. I hate to say it because like it doesn't seem possible, but unfortunately it is. There are enough sellers trapped. It can just keep going. But let's see if we can at least get our 10. And that would pay for my risk, which would be nice. But as you can see, even though it doesn't really look like it's doing much, the point is sellers are just not here. So anytime you see someone try to sell aggressively like this, as long as they defend it, it's usually dead. And see, that's purple. Well, the bar's not closed yet, but if this closes purple, it's just buyers pulling their order from the order book. It's not necessarily a aggressive seller. So just like this, as long as buyers respond, you just keep freaking buying it. You'll be wrong. Like, it's not 100% anywhere near that, actually, but it beats guessing. Like I said, definitely not the highest win rate trade, but in a trend day, it will work a lot. How much time do we have left? Okay, another 30 minutes. There's the purple bar. I did not get filled on my 10 points yet. I got close, but not filled. And that's the risk of buying the top, is if buyers give up and they bring it down here underneath the T with the yellow line on a bear bar, like, I have to give up. It might not be done, but I'm not gonna take anything more than a scratch here. Not at the end of the day, after being up whatever we are, 2% or something. I don't know, maybe it's even more than that. But see how as soon as we saw sellers try, the star shows up, meaning that there's an aggressive buyer in this bar. Now it's not valid until they close it bullish, but it's still a sign that buyers certainly, even though they gave up for a minute, like there was some illiquidity from people pulling their orders, like the aggressive buyers here are basically probably mostly sellers from before not wanting to be stuck overnight. See how it disappears? Because the bar is still live, so it's gonna warn us when the condition is there, but by the time it closes, there might not, that condition may no longer be true. So you have to wait for the bar to close, and then the the signal won't go away anymore. But it's seeing it, even when it's live, tells me that, like, for a moment in here, buyers were attacking, which is what I want to see. Um, but if it closes and there's no star, it's you can't enter up here, if that makes sense. Like, we got in on this bar because they showed aggression after the seller tried to attack, but if they close this up here with a pink bar, like, you don't want to buy it, in my opinion. It's, I don't know if it's going to close bullish, and I don't know if it's going to be pink, but if it does, it's just floating basically. So it's there's no additional order flow saying that, like, more buyers are coming in than before, like there was here. And again, divergence on the delta. So there are active sellers and buyers are absorbing the active sellers. That's the way to think about it. So most of the aggressive traders on this bar are actually selling, yet they're having a hard time closing it 24 ticks lower. So even though it doesn't look like it's going anywhere, I have no evidence to think that it won't keep climbing, so I stay long. Is it comfortable? No, not at all. You're always, I'm at risk until I hit that 10-point target, and it absolutely does stop sometimes. It, especially trend trading, the momentum trades like this, at the end of the day, like, it can stop. And then I keep this smaller time frame here to kind of keep an eye on the inside the bar, basically. And triangles up are good signs, as are the aggressive buyer defending when the aggressive seller came in. It's the same exact pattern as this. So star down, X up in the direction of the trend is a defense. So our assumption should be that that continues higher. It may not immediately continue higher, but someone was willing to buy it here when this guy attacked. So until I have evidence that he's no longer there, I'm going to stay long. Now, this could be a problem if they get this triangle down to print. Then this guy is going to have to defend again. Otherwise, we're going to have to get out of here. And again, if we draw the line at the T, this could happen rather fast. If they get the yellow line below that white line where the T is on a bear bar, it's okay if it closes bullish with the yellow line down there. But if they close it bearish with the yellow line down there, it doesn't always go down, but my odds of it continuing immediately decrease substantially. But see how before that happens, they're going to try to attack. See, they got a star down, so there is an aggressive trader in here. We suspected that because it looked like it was going to close with divergence, so there were more aggressive sellers than aggressive buyers, but it actually closed bearish and printed a star to the downside. So now that star will not disappear. So buyers need to attack here, or I guess defend. Otherwise, they are going to run for this tripwire, the T. And if they can get under that, these pink bars are probably going to get challenged. It's technically okay to short that. But on a day like this, like, your likelihood of catching the very first short that works is pretty low. I'd much rather be long, take the stop, like be long all day over and over and over again, take one stop at the end of the day, let them try to sell it, and if I get a pullback after they successfully sell it, then I can try to short if there's time. But right now there's like 20 minutes left in the day. Like, where are you really going to go with that short? Most likely, like, with all these sellers trapped, like, what are your odds of actually getting anywhere with it, knowing that a lot of the time they're just going to defend down there because you've got forced buyers below us who can't hold overnight and have been short since 10:30 a.m. And I mean, I feel bad for the guys. I've been there, but that's the risk of trading counter trend. I don't really need that level. I have no idea where it came from actually. It'd be funny if that turned out to be about the high. I must have put it there for a reason. I just don't remember what it was. Yellow usually means like a high of day or a low of day from previous sessions, so it might have been from like a long time ago. But I couldn't find it on a quick look. So they tried star triangle down, which is pretty aggressive, and also ring triangle down. Pretty aggressive trade. Like, if it's bearish, that continues 60% of the time. See that little dash right there? That suggests that this bar had more volume than expected for its position, but less delta, meaning there were a lot of sellers passively getting in here, um, and getting filled as the bar was rising, but it closed bearish. Generally, when it's bullish, that level will get retested like this. And if they now shoot up, it's an easy way to get long for a breakout. But if it's bearish, that level, the white level, will be defended. So once I see that dash, I can just look over here and see how they're trading it. See, now we're going to probably get a tripwire here, and that makes sense because this level getting defended suggests that it's bearish. Just like this one getting defended by buyers suggests it's bullish. See how the only place they can get the yellow line, which is where the volume is, underneath that white line is pink bars or purple bars or bullish bars. No bear bars. There we go. I hit my 10 points. Yippee! So, yeah, once that acts as support and they can't get a regular bear bar with VPOC underneath that level, the sellers know that they're in trouble. So I'm just going to leave my runner. I doubt we'll go that much higher, but God, you never know. At least I'm risk-free in the trades. So, and I don't move my stop usually until I hit like a real target. The 10-point target is just to pay for my risk. But when it comes to the runner, I don't trail to break even. It's usually a mistake. Eventually, once you make like a new higher low and higher high, then yeah, trail it under that. That's cool. But like, don't just arbitrarily move it to break even when you probably bought at like an imbalance zone like that, like we did. Like a area that had a lot of fighting is the last place you want to be selling now, when they trade over it, because they're going to come back to that level and check it naturally and probably check below it. And as long as buyers show up and they can't put any significant aggression below it, they'll just lift it. So yeah, your risk stays there. Like, you might take a very small loss, but it's not full leverage now, and the chances that it gets hit and then it goes to my target is pretty rare. So if it does get hit, I shouldn't be long anyway. But the chances that I can get 20 or even, like I said, maybe 40 points, it's totally possible. And I mean, that's the difference between a $200 day and like a $1,200 day. So the next voodoo range level is 47.25. So if we get above that, I can consider just exiting. So like, and that would be impressive in the last 20 minutes. I'm not going to make a mistake of staying in the market through the MOC. So I have 9 minutes left to reach my target. Keep that in mind. If you guys, I did it on accident yesterday, but normally I want to be out. I don't want to gamble with that runner. Um, I mean, you can if you want, but I'm not going to. If I can help it. Yesterday I totally forgot about MLC, and it gave me sick slippage. And even though that might happen to the upside too, it's like it sucks when I thought I was going to take a normal stop and it was like a 1.5 hour stop just because of slippage. It sucks. So, um, especially if I'm not going to trim my stop, there's no way I'm going to leave that trade on through MLC. So I got to keep a close eye on the clock here, and there's only 8 minutes till MLC. So if we get another like shove, um, I'll just try to get out. Even if I have to mark it out, that's fine. But at this point, I mean, I've already made $400. So on like a trade that I only risk for maybe a little less than, so it would be a fine trade even getting out here, but there are times when this just squeezes into the end of the day, especially like these like what's it called, like consecutive trend days where like everybody was short yesterday night and now they're like, okay, as soon as it dips I'm gonna get out, and it just doesn't. Like by the end of the day they're like, oh my god. And like honestly, someone could literally blow up their account, like someone big, and price would have to go up. Like they don't want to cover, but if they're leveraged enough, the like the institutional clearinghouse or whatever that they go through, like could literally like carry them off the trading floor. So, um, and that would just be like, I mean, it could literally, I've seen it go up 80 points in like a minute. Usually it's after MLC that happens, but not always. Sometimes the uh, the people with the risk on, like the the ones that they're trading through, um, they're not willing to risk anymore, and they're just like, hey, you lost. It's a margin call, but like for an institution. So I do have a level here drawn by a fib. I'll show you at 36.25. So that's a fairly good spot to exit if they struggle here. Um, and like I said, now I got 6 minutes to make a decision here. So if we get a nice little push, I will be happy to exit. And again, like all of a sudden, on average day, it turns into like pretty sweet just for being a little bit aggressive, but recognizing that most of the time these end strong. All right, so let's see if we can hold above this fib. Otherwise, I'll just tank. I'll just let it go. But like I said, that rare time when it goes up 80 points in the last 10 minutes, like but you can see here's another T. So if I get a yellow line below that, I don't want to be in it. So I can trail my stop that way, but I don't know exactly where that would get me out because it's the yellow line getting under that, not price. It's got to get volume. Like if most of the volume of the bar, the prints, is below that, and the bar prints bearish, well, that means like not only did they get under it, but like someone big got under it, or a lot of traders got under it, like literally the biggest of the in the entire bar. The price with the most volume getting out, getting below that key level means that like this isn't just a test, like they really did get it. So I use volume as like a confirmation that way on a very small time frame in the same way that people often do with like a daily chart. All right, so it's struggling a little bit here. We can probably just ditch it. Let's be happy, and because see what happened is they had pushed over this fib, and then they gave it up, and they were tapping on it, and they were absorbing it. If you look Um, Here, you could see it on the DOM too, but like this was the level, and they dipped under it, and then they were trying to lift, and you'd see the DOM, and they were like adding, um, sellers were adding to defend it. It doesn't mean it's done, but if they're going to defend that levels, like I'm, I risk it dipping right before MOC, and then I have to get out, which would suck. But it doesn't mean it has to be done. It's just like inside the bar evidence. Here, you know what? We can see it on the 8 tick. Look, if I pull up the 8 tick, so this is even smaller. I got it at 46. So it was this bar right here. When this took out this, and they tried to push up, and I didn't see any buyers. Eventually, the sellers did give up, but if I didn't see any buyers to take that back, the level is 76.25. Wait, that can't be right. I must be 36.25. So that was the level I was watching. No. Oh, that's price. That's I'm like, why can't I delete that other line? So they gave it up, and then like I'm not gonna sell just because they gave it up, but they tried to like with I think it was in this bar. They gave it up, and then they tried to take it back, and they like lost it, and I could see it on the DOM. There's MLC. See, that's why I don't want to be part of that. But it's not going to be that high. But if I see them aggressively attacking that, and they're getting volume under there, and they try to save it and they can't, like the chances that they're going to retake it in the next 4 minutes or whatever I had, it's just not good enough. So, not worth my risk. But I mean, that's here. I'll show you. How do I get rid of my account ID? So yeah, so this is an evaluation, a relatively new one. Trading two contracts. That's not too bad. And I was up 200 on that one before. Where's my? Sorry, I'm trying to find the performance because I can show you how I did for the rest of the day. Where is it? I guess I didn't open it yet. How do I? Oh, here we go. So, I don't want to. Okay, so not too bad. Not too bad. Now, this win rate looks awful. And then this one I was trading micros, so that's why there's so many, because I was trying some new things in both of these. This one on the top, I was trading my regular setups, and then these two, I was trying some new ideas, and I'm still not super sure how to execute all those new ideas, but the point, eventually I was able to catch, like with these evaluations, like I don't treat them with a whole lot of respect. If I've got a new idea and I think I get it, like I'm like, yeah, that's probably right. Like I'll forward test with the evaluation and just take literally every setup that shows up like that and see like, can I survive? Because the back test is one thing, but like actually forward testing it, trying to click the button, see how far does it actually go usually, like is a 10-point stop enough? Do you need 20 points? Like that, you can do a back test, but it's not really this. I mean, past performance is not indicative of future results. So like, it's not the same. Whereas like forward testing, like if I can execute the trade over and over again and like have a strong win rate, like I'm gonna assume that setup is probably good. But sometimes in the process of trying to execute new setups, I like just make errors. Like, I think that it's the, like, I think I need to wait for something to happen. And then I realize that, like, it's way better if you wait for something else. Like, the parameters are not always very clear. Uh, and I start forward testing them long before I've determined what all the parameters are. So there are days like today where, like, in my normal account, I've got my typical, like, strong win rate, and then in the evaluations, it's just like I'm just hammering every possible trade to see if I can do it right. And, like, once I realize that it's not working, which is what was happening earlier, like I was clearly doing something wrong. Um, and I'll have to look at it and see, like, I'll have to review it and see what the like what the adjustments need to be. But when I was down on that account, like that one that I have like a 30% win rate, which is so embarrassing, it was down to like negative 1,500. Um, and so, yeah, I stopped taking that new setup and just like built it back up again so that I don't like blow up the account. At best I could, I just started momentum trading and just did what we just did. Uh, and then in the other account, the one that we were trading just now with the strong win rate, but like a ton of trades, I was earlier with that one trying a new idea with micros. So I was never, I've only been trading that account for like 2 weeks, I think. So it hasn't grown all that much, but I still don't want to blow it up if I can avoid it. And when it's a new idea like that, and I'm trading an environment like we have today, if I'm trying to figure out if like this, I was working on a reversal trade, and like they're just not gonna work in this environment. And while for a while there, I thought we might get a reversal early on when we were down at like 15.6, 17. Oh, that's where that level came from. It was 100 points lower. I put it in the wrong spot. I remember putting in 15.6, 17.75 or whatever, but I must have put 15.6. Yeah, 15.7. Wow, we've gone up a lot. 15.7, 17. That's why it was a rogue level way up there. Now I found out. I was like, why did I have that? So that was my idea, pre-market, of where I thought the reversal could happen, and it did initially, but it took me like 4 tries to get it, just because it's a new setup and I wasn't sure what the trigger was, and selling is sometimes harder than buying. Like they don't always continue right away, um, and but I didn't have confidence that it was going to work because it's literally a setup that I developed in the last week. So I did it with micros, and so the result is like it looks like there's 64 trades or something, but it's literally just like 6 trades with 10 micros, so that I can like, because the way I do it is I'll go in with 4, and then if that stops out, I'll wait. But if it doesn't stop out and I get like the signal again, I'll add 4 more. But then that one might stop out and then it could signal again, so I'll get 4. And so all of a sudden, like I can be, if it works, like I can be in for a lot more. And then another way I pyramided it in is if you have a trade where like the trigger, like, okay, here, I've done this with the T trades, I'll show you. In fact, this totally triggered and I wasn't paying attention. So the tripwire, couldn't think of the name. You have to get a triangle down with the yellow line underneath the low of the T, the bar with the T. So this one did it. So the entry, the initial entry, is here, and the stop goes above the high day. So, but that's a 22-point stop, which is big. So I can't take that with 4 minis. Like that's too much risk for me. So what I'll do is either take it with micros and then just let it go if I'm not super sure what to do with it, or I'll get in with one mini here, and then when it pulls back towards my stop, I will add the moment I see on the DOM or the smaller time frame. I'll show you where that would be. You can see it just as well on the small time frame as you can as the DOM. It's the same information. So if I would have gotten in here, which is like literally right before the pullback, but that's just sometimes how it works. So my first contract's in there, but my stop is up here at, let's see, 42. I don't know where 36 is coming from. Okay, I'm not sure. So my stop's up here. If I approach that stop and then I get another signal, like green diamond getting beat by VPOC. So green diamond is big volume, and I'm now getting most of the volume in the bar below that big volume candle. I will add another mini here. So bringing my average to like here, because it splits that. So now, even though I've got 2, I don't have a 20-point stop on 2. I basically, like, if you do the math, it works out about to the same as if you got in here. It kind of depends on how you exit, because it's, yeah, but assuming that, like, if you stop, that's how it would more or less do it. Futures are a little weird because it's like first in, last out. Is that it? I think that's how it works. It's always a little bit confusing to me how that actually looks on your account. But one way or another, if you want to do the math, you've decreased your, you might have increased your leverage, but your stop per account or per contract has decreased. So as long as you're okay with taking 2 contracts with like 15 points or whatever, or yeah, like it's, you can take one with 22 and one with like 10, and you're gonna average about the same as you would have if you got in here. Yeah, and then you actually had another diamond getting beat by a triangle. Did I get the VPOC below? No, but I did get below this VPOC. The better trade is diamond up and then mark that VPOC and get a pullback that holds. So this one does not pull back enough. I guess you could get it here, but that's pretty tough. And then this diamond is, oh wait, am I doing this backwards? It's a sell. I'm sorry, it's a sell. So it's the orange ones. This is a totally different trade. So orange diamond, draw the VPOC. So big volume Renko bar. If I get a pullback that is defended at or below this, I can get in here. Assuming that above this, I was bearish. You don't want to do that against the trend. That won't work. So here on this tiny little time frame, the bull move, you'd mark this. We leave the area. We come back, it holds. You could get long here as long as you think it's bullish back to resistance. And then here, we don't hold it, which means you want to get out of the trade. Then there's another orange. So if they pull back, see they didn't, oh, no, it's okay. See, we only got a pink above it, and that's okay. Pink bars we don't count as beat because they are basically illiquidity. So here, your entry is this triangle down where the arrow is, short. And then you can see the green one. If we extend that, we did not defend it. We got more than just purple underneath it. So you do not expect this to continue higher than that VPOC. So this, too many lines. This should be resistance. We could get price up there. You can't just put your stop there, but you shouldn't get volume up there. And if you do, you know it's over. So, and then like I said, this for the short, it can come all the way up here, but as long as that holds, if it then reverses, you could short again. So ideally, we want to see a pink bar or a wick here, and then a triangle down. That for the short, that would be perfect because they defended the short, the bearish orange diamond, and they rejected the green diamond. So let's see. We're already closed, but I could technically take it for another 10 minutes or whatever. But I can't stay with this too long because I got to go get my haircut here. So see how they came up to it, but they're rejecting it? Even on this tiny little time frame, that's relevant. So if we get triangle down here, it's a short. In fact, this might even be a short because the VPOC's below it. It's a little more dangerous, but... Oh, and it's another orange. Interesting. I can take it just for fun, I guess. Let's try. And it's a small time frame, so it's just a small scalp. Let's see if I can get one more little extension. That might be it, though. 3 bars is pretty good. On any time frame, 3 bars is typical. I guess that's only 1 bar from the triangle, though, so let's see if we can get one more. We didn't get to support. I want to get here, and then I can cover. If they defend it. Here we go. Ta-da. Okay, that dash is going to pull like a magnet. So if we get over that, it's probably done. But we got to support. So if they don't continue to sell here, you don't really want to be short. There we go. That's perfect. Now we can't get above that with VPOC, otherwise it's over. The double dash is potentially exhaustion on this tiny little time frame. So I can even trim my stop a little bit to like 12. Because if we get VPOC above those, like that, I don't, oh fuck, that was yellow. That was pink, I mean. Shit. Well, that's okay. I should have waited for this to close. Because if VPOC's still below it, it can reject here. I just got a little trigger happy and exited. But that didn't actually stop. It got price up there, but not VPOC, see that? And if it would have been pink, it wouldn't have mattered. So I should still be short here. But I covered, like, just impulsively. Seeing price pop like that on the, like, I was just like, nope. Now if this closes bullish with VPOC above that line, we're done. No longer bearish. Because they couldn't take this low out. And they beat the dashes. But this is usually bearish. So if they can push down, it's probably going to cascade a bit. But see how they're trying to defend it. And usually with the short side, like if it's not immediate, it's probably not going to work. If you find somebody buying down here, like they're probably going to come back up and set it up again, like sweep your stop and then roll it over. So not so much that way on the bull side, but on the bear side usually. So if they close this, nope. I was going to say, it would have to be you'd cover at like break even plus 3 ticks or whatever it took. But see how they're really struggling to get a close there? So you could literally get in short here and put your stop at like 0825 and get like 2 ticks of risk. That's what's nice about getting these situations. Is it going to be right 60% of the time? No. But you're going to risk, 20 bucks with a chance of getting 200. So, because now that VPOC is up here, you should not close this bullish. If you do, now, did they just pull VPOC underneath? That's the problem. Is if they put too much volume down here, you'd have to move your stop up because now they could lift it with a pink bar and roll it over. So that's the one risk. Like if I would have taken that little trade with like 2 tick risk at like, usually I'll do it with a lot of contracts. As soon as they shift that down, I'll cover for like a small win if I can. And then like wait for another opportunity because you no longer have the small risk, or you at least could cover most of your contracts. Because like the way I look at it, if I can put my stop here and my entry here on that other white line, like to risk an R rather than taking 2 contracts, I could literally take like 12. But if they shift volume down and now my stop has to go back up here, see now my stop would have to be here because the volume shifted down. Even though they closed it bullish, the VPOC is not above this VPOC. It's equal to it. So I don't know for sure that it's dead. The bear trade is dead until it gets to like 10. So now all of a sudden, rather than having 2 ticks, I've got 4 points. So 16 ticks. So if I took 12 contracts with 2 ticks of risk, you can't just move your stop. But you don't really want to stop out because why take a loss on a trade that might actually still work? So you have to, I wouldn't recommend doing this with such a small time frame because it's so fast, but you can do this in a higher time frame, and the important thing is just to be aware of what the rules are so that if they do shift volume lower, price is down there too. You don't shift volume lower when price is up here. You shift volume lower when you push down. So if they push down and push volume lower, I will take a profit of like 4 ticks with a risk of 2. And even though they might continue lower and I don't get anything more, I've still made 2 R's. So you just can't be greedy, and you have to be logical. You can't change the rules like midway through the trade. I don't know. I probably shouldn't even be showing this because people are gonna get in trouble. So don't do this because you can lose a lot of money if you do it wrong, and it takes a lot of practice. And you should not be doing it on an 8 tick. It's way too fast. Because like, look how fast that printed. But see how this did not close bullish? It's still valid. It's still technically bearish. But my risk now is 16 ticks, not 2 ticks. So rather than being a 1R trade, it's a 4R trade if you took it with 12 contracts. And that would suck if it, in a blink of an eye, stopped out. But like I said, your win rate will lower even further than it would normally by taking a 2 tick. Like normally the win rate with a 2 tick risk is not amazing. But if you leave your stop here, even though the volume shifted, your win rate is like 20% because now most of the times it actually drops, it lifts first and it's still bearish. So you're getting stopped out. It's just like moving your stop to break even. Like you're getting stopped out even though there's no evidence that you're wrong. You can't do that. Well, you can, but you're not going to stay profitable if you do that over and over again. But this was still bearish. I shouldn't have covered, but like I said, I saw this pop up and covered it, and that's what made me realize that if volume would have stayed up here and it closed bullish, then I would have been forced out of the trade. But volume had shifted down and price came up. And so I should have still been short, but with a stop above this bar. Because if this bar thou now closed bullish and it wasn't pink, it's bullish. My trade is dead. But you can't just quadruple the size of your trade and leave your size, your leverage the same. You need to adjust your risk. If you're going to move your stop, you need to adjust your risk. You can't just move your stop deeper. Just like you shouldn't be moving your stop like to be smaller either. So hopefully that makes sense. But on the bigger time frame, you can see, hopefully, well, probably not because most people don't know how to read this, but what it, here, let me delete these lines because they're going to be slightly different. So in the higher time frame, we talked about the tripwire triggering here with a stop above high. And we would expect that we would drop to the next point that bears got trapped. And that is this right here. That'd be your primary target. And then doesn't mean it has to stop going down, but the problem with that trade is that you've got a trap bear literally right where you're getting short, and that's why it lifted before it dropped. So if you notice this, that like, and this is something primarily for people with the algo or who are using a systematic process to trigger you in. If you are getting triggered in to a trade and there is like short and there was a sign of an aggressive trader short, like right below where your entry is, that's going to get in your way. See, the yellow line is where most of the volume was in that bar. All right, so if we draw a little box from where the big volume was to where the highest seller was, this guy covered, right? He was offsides. Price came back to try to get to his entry where most people were short there. It didn't quite reach it, so he quickly covered. But it was, since it's turned bearish here, it didn't break the high, meaning that your trade is still valid. You never know for sure. See, sometimes when you have this guy, they approach him, they sweep your stop, and then they drop it. I don't have a way to know when that's going to happen. If I did, I wouldn't share it. But in this case, the best thing I can do, in my opinion, is be aware that he's there. There's another one right here, which would be, and know that, oh shit, I gotta go. Know that these traders these trap traders are likely to get in your way, at least sometimes. Maybe not every time, but sometimes. So either you take your trade with your stop up there and you enter here like you would normally do, and sometimes you get stopped out and sometimes you don't. But you better be able to get 1-to-1 if they come to the trap trader and turn around, because a lot of the times they will. So somewhere in this trap trader's range, you need to be taking some profits, like this wick did. Someone in this wick probably got short and then took profits. So if that distance here does not pay for your stop, if that's not 1-to-1, the only way to take this trade is to actually wait for the times that it does exactly this, because that way your stop is now here. And so now you still have to wait for your, so you get up there, you turn around, you see this close. Your entry is the same, but your risk is smaller. So rather than taking more contracts, like I was talking about before, in this case, you take the same amount of contracts, but you can now target that range for 1-to-1 or more. Whereas before, knowing that this guy was here, especially knowing that this guy was here, you might not take the trade. The great thing is when this guy is identified as being trapped and his level caused the lift, well, now his VPOC is not going to necessarily cause any trouble. So now it's this one that I have to worry about. And so the nice advantage of waiting is not only am I more confident getting into the trade here after they reverse, but also I don't have to worry so much about this guy. The only one that I have to beat to get a runner to work is this guy. So my first exit needs to be here. But if they can get lower than that, I can keep holding. Because the next stopped out trader there's where all the volume was. Is all the way down there. So at least some of the time it's going to go further. Hopefully that makes sense. All right, I gotta go get my hair cut. So I might do another stream later. I wanted to review the two setups that I was using earlier. And it's kind of rare to get like these huge continuation trend days. So if people want to watch a review, let me know. Otherwise, I'll just do it on my own. But if anybody would watch it, I'm happy to do it live. All right, see you guys all then. Otherwise, next time. Here's my contact info if you missed that in the beginning.